Hi, everyone. Welcome to the Solomon and More podcast. Today, we got some information that we'd like to share with everyone. How are you today, Solomon?
Living the dream, dude. It's been a while since we've done one of these, so certainly excited to really get into the weeds and try to provide as much content as we possibly can out there for you guys.
Yeah, it has been quite a bit. So, the first piece of information is this is a video clip of just senators talking about blockchain. Now, listen to what they have to say.
I don't get the point. I really don't get the point of blockchain and cryptocurrency. It's like keeping track of how many times you chew gum. Like, who cares?
I wonder if you would support changing the name of cryptocurrency for creepy dope currency. I'm going to discuss this with my colleagues. I think it's pretty dope.
I'll leave that skill set to the committee. Now, Sam Bankman-Fried, or should I say in name 14372, is a well-known figure. Only one wearing shorts. His one purpose was to keep the SEC out of crypto. My fear is that we'll view Sam Bankman-Fried as just one big snake in a crypto garden of Eden. The fact is, crypto is a garden of snakes. Crypto, hidden currency. And as Sam Bankman-Fried would tell you, there's a hell of a market for bankruptcy coordination. And have you any idea what the total money in and the total money out of FTX was?
We don't have a full accounting at this early stage now.
Do you know how much was in tokens? So let's say I have Dogecoin, or I don't even know how to say it, but I have 10 Dogecoin, which a year ago, is it Dogecoin or Dogecoin?
It's nuts how out of touch these senators are, and they're not controlling crypto, they're controlling us and our accessibility to crypto, and they have completely no understanding about anything, and they're just voicing their anti-crypto narratives, and these are the people that are supposed to know about it so they can make the right decision on regulation, and they're complete don't even know what they're talking about. It's nuts to me. How do you feel about this?
Well, I mean, even Brad Sherman, I mean, that dude's been here for he's been in tenure for God only knows, because those tenures just don't go away as far as his Senate seat. But yeah, if you look at Open Secrets, his largest campaign contributor is a company called, I think it's down a little bit further, I think it's Democracy Oversight, Democracy Engine. $68,850 basically put into his contribution for his campaign aspects. And if you look at Democracy Engine, it's very much so tied to platform called We the Peeps and all this other stuff, which is like an Ethereum based crypto initiative that was starting out. So who knows what's still going on within that, but I agree with you totally. I don't know at this point in time, how can we still expect to believe that these people and I do believe that they're very out of touch, but I mean, it's almost like reading that omnibus $1.7 trillion bill that just came out, where you see this much, how much research do you think they're actually doing into what's going to be underpinning the next financial system, or they know it's coming and they just want to keep the mass populace out for whatever nefarious reasons? But I think it's probably a mixture of both. Creepy dough. Why don't we change crypto to creepy dough? That's it's almost like children in an elementary school just arguing back and forth, and I don't even understand these panelist things where they get these people up and they're interviewing them. That's what I'm paying these senators to do.
It's a Senate banking committee, so they're interviewing the new CEO of FTX to find out where everything went wrong, and they're just they're not asking them quality questions. They're just saying moronic statements. If I'm interviewing someone, I'm trying to get FTX in trouble. How about you lure them into something where they can actually say something? And I'm noticing right here, Blackstone. So he's being paid by Fidelity and Blackstone. So first of all, Fidelity offers Bitcoin trusts and Bitcoin ETFs and not Bitcoin ETF, rather Bitcoin IRA. So Fidelity offers retirement in crypto assets. Blackstone just froze the market. They had a breach. So their real estate trust for private real estate was frozen. So they stopped investors from selling. They can't sell. And these are the people that are giving him money for his contributions, political contributions to make decisions. And these are people that are bad people, right? You don't freeze people's money and tell them they can't sell something. You can only sell 5% of this trust right now. So if you're a private investor and you bought their private real estate fund, you can only sell 5%. So they locked all these people into this thing, and these are the people that are backing Sherman, and he's this complete moron on Senate Banking Committee. So
yep. I couldn't agree more.
Yeah, I don't know. It's probably a combination of, nefarious reasons and just being out of touch. But this is the next piece of information. So this came out of the Bank for International Settlements, and in this video, I'm not going to play it, but in the video, he talks about different crypto assets and why they're decentralized. And he says, that they make all this friction. So Ethereum, for example, makes all this friction in the Ethereum ecosystem so it could be incentivized to decentralize. So you're paying the node operators a fee, you're paying the liquidity providers a fee, and all these people that make it decentralized are what's making it decentralized. The friction is making it decentralized. So that's a completely different philosophy of what we have like on the XRP ledger, Hedera, or IOTX. The fees are brought down, and they never address this. They talk about proof of work, and the central bankers criticize proof of work, but they never say anything about like these more efficient chains. So I just wanted to catch your thoughts on that. What do you think? Why they purposely?
Yeah, I mean, I think it's. I mean, it's if you look at like the launch of like we always hear like the purview of like decentralization, and especially if you look at like Bitcoin and Ethereum, people are like decentralization. But there's a lot of incentives to keep that decentralization going, which essentially brings in centralization aspects. I mean, as far as like the mining aspects within Bitcoin, even Ethereum merging and moving to proof of stake, governance voting and stake obviously adds centralization aspects in, where if you look at kind of these high utility ecosystems and networks, yes, you could argue that at the onset, they may have started more centralized, but the underlying asset and the utility of the underlying asset and the ease of use and the cheapness to use that asset, these networks over time, like if you look at the XRP ledger, it's certainly decentralized over time without having to necessarily bastardize the value proposition of the underlying asset. So I just think it's really interesting, and it's like they're total polar opposites for like the ways that these things have kind of been started from the onset. And now we start seeing like I don't know if you saw this, Darren. There was like a few days ago, there was like the Bitcoin blockchain validators were having a discussion again about like block size and things like that, about potentially trying to make the network more efficient. It's like that's all fine and well, but we touch about this a little bit. It's very reactionary, and it's not really proven. Like it to me, it's like how much thought process was going into the beginnings of these protocols, where at scale you have to basically bastardize your own vision of decentralization. Nothing against Bitcoin or Ethereum, but I would much rather make decisions like to decentralize over time, but not give up the underlying value of the asset or the utility of the asset that I'm actually using. So totally different scenarios, but it's really interesting to kind of watch all the narratives unfold.
I mean, that's an interesting point about Bitcoin, because I see like this misconception that proof of work decentralizes Bitcoin. That's not what decentralizes Bitcoin. There's like 10,000 nodes. Those nodes are people that make votes on the Bitcoin network. That's what decentralizes Bitcoin. Mining is just a tiebreaker. So it's a complicated problem. People throw out answers. If one of them wins, they get to put the next block, right? So that's just breaking a tie. What decentralizes Bitcoin is the node. So everyone's in this proof of work type of fantasy where like electricity is making all these decisions. That's not true. It's people that are making the decisions, and there's no governance. So if 30% of the network says no, they just fork and make a new version of Bitcoin. So you see Bitcoin Gold, Bitcoin Silver, Bitcoin Platinum, all these crazy forks happen. And at one point, there's a scaling problem with Bitcoin that becomes too big, and they have to vote on it, and they have to make a new network. So the Bitcoin network today is going to change over time. It's not like it's this finite thing that people argue, like Saylor argues that it's embedded in the code, and Ethereum switching stuff is a big deal because they're switching money. Bitcoin works the same exact way. So I don't know what he's talking about, but chains evolve, and it's completely normal. It's nothing that Bitcoin stands out. Bitcoin does the same exact thing. Taproot is an example of this. The next piece of information comes from the Bank of England. If a blockchain become more critical to the financial system, how should it be governed?
Yeah, and I think that's kind of tying onto the back of what we were just talking about. Literally, they're going over Ethereum's merged to basically into proof of stake, obviously, and the Bank of England asking questions where what if something would have went wrong? Like who would have essentially been able to provide a solution? If you go down through here, Darren, there's like some interesting points that they come up with. I like the verbiage they have too, where it's not they're not saying if blockchains become critical to the financial system. They're saying if a blockchain becomes critical to the financial system. And I think you and I probably both believe it's going to be, multiple, not tons and tons and tons, but there's going to be, at least right now that we can think of, probably a handful of blockchains or distributed ledgers that are already being, kind of combined into the legacy system that, that already exists. So the merge highlights a range of questions about the governance of permissionless blockchains. This event posed a number of operational and technological risks and hence raised questions, including what if the merge had gone wrong? Who would have been responsible for and had the authority to coordinate a timely solution? Who would have been accountable/liable for any financial losses incurred by others as a result? And I think it's an interesting question. There's not really anybody you can point a finger to. There probably are people that can sway their weight around a little bit within the ecosystem, but are there going to be kind of governors of like these distributed ledgers like over time? Is true decentralization ever going to be actually a thing? Who is going to be kind of at the mercy of the financial system, like if something were to go wrong? And I don't even think that's necessarily like a huge issue, just because there's been testing and testing and testing. The whole point is kind of the sovereignty and like the utility of these ledgers. So it'll be interesting to watch. But I mean, they're certainly talking about all of this stuff behind the scenes right now. So
like to mention, blockchains do not constitute critical financial structure yet. I like how they put it into parentheses and said yet. But I mean, that's what's, governance is important. How these blockchains evolve over time is important. And, for the most part, we don't see anything really disruptive, right? But Ethereum had its merge to ETH 2.0, and it's, it went pretty smoothly. The blockchain didn't fail or anything like that. So over time, the crypto communities are proving that these actually work, and it actually works to evolve. So I don't
go back to that last one real quick. I really like just the sentence that they have there, and it's a common sense. I mean, this is very common sense that blockchain and DLT becomes extremely integral within the legacy financial system. We all see that it's coming. But they say after this, so blockchains do not constitute critical financial infrastructure, and then in parentheses yet. We've already seen the Bank for International Settlements probably 4 or 5 months ago come out with that document about regulating DLT, same risk, same rules, same regulation type aspects, but that it's too late to regulate where if here's legacy finance and here's DLT and blockchain and crypto, it's too late to regulate, in a parallel way, because they've already started to converge. So they have to start regulating in a way where same risk, same rules. They're going to regulate it like they have, the traditional system. We might see some changes based on the tech, but I like what they say after this. But they could conceivably become more so entwined in the future if crypto asset activity and its interconnectedness with the wider financial system continue to develop. That's like me saying just because we're in a shitty point in the market, that you don't see development going on these chains or on these ledgers. And 1,000% we see development, all-time highs in development, which I think Darren's about to, get into right now. Like the tech isn't stopping. The integration isn't going to stop. So basically what Bank of England is telling you right now, if blockchain and DLT continues to develop, which we see that daily, Darren's about to show it to you, it's going to become more and more entwined with the system that currently exists. So it's literally it's a question without needing a question. They're giving you the answer right within the question itself. So
yeah, and I like how it's the interconnectedness with the wider financial system. So that's what we're seeing as equities become tokenized, as bonds become NFTs. This whole system is evolving, and it's merging with the traditional financial system. All right, so this next piece of information is Internet Computer Protocol. So I want to bring this up because this had a really high price when it first came out. I forget what it was. I think it was over $500, and it just rugged. There was some speculation on Twitter that FTX was part of this, so they purposely brought out the price really high of ICP and then just dumped the whole time down, and that kind of locked their bags. And what's happening, this green line, is the active developers that are working on ICP. It's taken a little dip, but from the start, it started off with one developer. Now it's all the way at like 100 and something different developers that are building on top of ICP. So I think that's a pretty interesting metric for how we look at different crypto assets. And the same is true with Cosmos, Atom. It's gone straight up, and the price is declining at the same time. So this site token terminal I've been using a lot just to kind of look at the different projects and see where they fit. And we'll talk about where XRP as well as Hedera fits into this, but you can see from daily active users, you can see how many people are actually using the chain. I think it's interesting. Binance Smart Chain is actually way up there. I personally consider BNB to be a bit centralized for my taste, but the next one is Polygon, then Ethereum, Solana, and this keeps working its way down. But a lot of these protocols are being used daily by a lot of people. So as that continues and as more people are brought onto it, these problems are going to surface and they're going to be worked out, and that will just prove to its stability.
I really like this site. Can we stay on there for just a second? Yeah. We should note you cannot search for XRP on this site. You cannot search for HBAR on this site. And that's because of the tribalism that exists in crypto, obviously, and who else knows why. But I'm curious, if you type in Ethereum, do we see any sort of like an equilibrium with, because we know how many devs are there's thousands upon thousands of devs that work on Ethereum. If you type in Ethereum up there, I'm just curious what it looks like from a developer standpoint. I'm definitely going to be using this site. It's really cool. Okay, so that is
active developers. It's got 160 now. The way this works, oh look, it plummeted recently. So the way this works is GitHub. So GitHub's like this open ecosystem for developers, so people contribute code on GitHub, and this site is just tapping into the GitHub and saying how many developers are actually contributing to the code in like the last 30 days. So they have like a certain metric on how they bring in this information, and that tells you, there's this many people developing on the protocol of Ethereum. It's completely dropped over the last couple of weeks, but we know when we look at like CoinGecko, all the ERC20 tokens are essentially building on Ethereum. So how does, I think this is just Ethereum's GitHub that they're pulling data from. So, you can use this as a frame of reference, but when you're doing your own research, you can look into GitHubs and look how active developers are. And we'll show you that in a little while. But yeah, I've been using this site. It's really interesting just to see the different how everything comes about. So if I just go to blockchains and then I look, this is revenue. So how much does the protocol actually make? I don't really like that metric, but the active developers are really like, you could see Filecoin here. It's 96. And if we look at Filecoin's chart, so I recently wrote an article for the Lighthouse report where I talked about Genesis. And Genesis, if you don't know, is this really, really big lending service in crypto. They've been around since like 2013. They've been around forever. And their parent company is Digital Currency Group. Now, Digital Currency Group is loaded up on Filecoin as well as other crypto assets, and they're tied to the Grayscale Bitcoin Trust. Now, they need $1 billion. So in my mind, I don't know if this is accurate, but to me, it would make sense if Digital Currency Group was selling their assets to make up for this loan. And one of them is Filecoin. And Filecoin is listed as one of the coins that has a lot of active developers. So I found that pretty interesting. Let me see if I have this. Hold on. All right. So Digital Currency Group, Genesis, Grayscale, 20% off of GBTC. And that's Grayscale's Bitcoin Trust. So that's the other smoke signal is Grayscale Bitcoin Trust, if you don't know, is trading 20% lower than actual Bitcoin. So there's a problem with this market, and this makes Genesis Digital Currency Group a ton of money. This Grayscale Bitcoin Trust, they charge a tremendous amount in fees just to have this, and it's trading well below what Bitcoin's actually trading at. So that's a pretty interesting note.
That's in the thousands. Is it trading for $8,000 right now? Essentially around there.
$8. So this is $8.
Oh yeah. The trust.
Yeah, so I think it's like, fractionalized or something. So
yeah,
I think it's but it should be, somewhere up here. We should be like around here if we compare it to Bitcoin's chart. Let me just hit Bitcoin and compare it. New price scale. All right, so Bitcoin is, so this was the all-time high of last time. These charts should be above this all-time high, and it's not. It's below the all-time high. So this orange line's Bitcoin today, and it's completely different than what it is here. So this candle should be above this somewhere. So it's not lining up. That's not a good sign. So the next piece of information is, I believe, this is XX community member. He's doing a giveaway. So if you want to participate, you should find this tweet. I'll add in the link in the description. But you have to follow these people. You have to retweet this tweet, and you could be eligible to win. And I know he's actually going to send money to people because I talked to him. It's not like, there's some of these contests that they post that there's no winners. It's just like engagement, but this is an actual contest. So if you want to participate, you can.
And I think Flower Tree actually has kind of the jingle or song aspect too. If you put together something for 30 seconds, I think there's like 3 or 4 prizes within it. The first one is like, I forget how many XX in total. I think it's a good amount. Hold on, let me check real quick. It is.
Yeah, so if you reply to this with whatever gets the most likes, that's how you win. So if you come up with something cool, you'll get more likes on it. So just wanted to mention that.
500 for first place, 200 for second place, 100 XX for third, 4th to 11th. Looks like 50 XX. So yeah.
Yeah, it was very generous. He's doing it for the holidays. So if you want to participate, I'll add it in. All right. So this next piece of information, Matt Hamilton talked about Swift, and Swift had a proof of concept, and the proof of concept failed, and they wrote about it and said the reason why it failed is because they didn't have a public asset. They didn't have a cryptocurrency. It was all these closed private ledgers, and they don't work. There needs to be a public ledger somewhere in here. And he first said it was R3, but he came out and said it was Hyperledger. But that's not the point. The point is that you need a public chain for this to work.
Go down real quick so I can read what he said there about Nostro and Vostro. They replicated. Okay.
Yeah. So
yeah, you're going to get into Bob Way though. Bob Way with the OG aspects with what's his name? Godfrey LeBrant, that was the ex-head of Swift.
Yeah, so Bob Way chimes in on this thread, and I'll add this as well into the description below. But Bob Way chimes in on this thread, and he talks about when he first met Godfrey, which is the CEO of Swift, or used to be the CEO of Swift, and he pitched him the idea of Ripple, and he said months later, Swift had the same exact pitch deck as what Bob Way showed Swift. So they basically stole Ripple's idea and made Swift GPI with it. But Swift GPI is an incomplete idea. It's like Xcurrent without the aspect of XRapid or ODL now. But the whole system works a lot better with the cryptocurrency. So everyone argues, and I just made a video on BlackRock where I got millions of comments where people are like, oh, you don't know what you're talking about. They're just going to use private chains and that's it. And they're just going to have their own centralized private chain. Well, that doesn't work. And it's proven that it doesn't work right here with Matt's link. So if you want to dig into this and read the 24-page report, there doesn't work with private chains. So Private chains, in my opinion, definitely enhance the system. There's a reason why we want private chains, but it's an incomplete picture, and that's what matters. We're not gonna just have all private chains.
Did you see the? I find it interesting with the timing aspects too, like where what was it? Bank for International Settlements, like 2 or 3 weeks ago, putting out that document about non-deliverable forwards and FX debt obligations globally are like 85 or 88 trillion dollars. So the amount of debt obligations that exist that are denominated, I think it was denominated in, I don't know if it was dollars, but it might have been USD, but I think it was just like maybe fiat across the board. And just pretty interesting, because if you actually are paying attention to what Swift is integrating as far as crypto is concerned, which is live right now for non-deliverable forwards. And the way that I understand non-deliverable forwards are, yes, they are still settled on the front and back end with fiat or dollar-based currency, but there's always going to be a little bit of volatility. And that volatility gets settled in potentially in the crypto. And they're also integrating the FX, so the foreign exchange aspects, into Swift. So look at, if you're ever on Swift, or if you ever want to look up like ISO 24165, which is non-fiat currencies, that's what Swift is integrated, and it's certainly non-deliverable forwards right now. And then I think they've got a lot planned for their standards release in 2023 in November for the FX aspects. It's just really pretty interesting timing, given the fact that we start hearing this like 2025 narrative with CBDCs and regulations and everything else. It's almost like we're leading towards that next pivot point. So yeah.
So you mentioned the 80 trillion in the blind spot. So there's $80 trillion that could be missing. And then this is part of the Eurodollar market, which I've written articles for the Lighthouse Report on as well. So what ends up happening is you have these banks that have these really complicated Excel sheets, right? It just says, I owe this bank owes me, and it's just really complicated. But the underlying assets are treasuries or bonds. And what happened was the UK bond, the gilt, completely fell off of a cliff. So they took these bonds and levered them like crazy leverage based off these bonds. These are considered high quality liquid assets. So they took these and levered them, and now they just completely dumped. I think it's 40% or 30 something percent that they dumped, but they built a whole house of cards off this, 33%. They built a whole house of cards with this, and then on top of it, you have dollars all over the globe that are levered just like this. And the volatility in these currencies and bonds are causing complete havoc on those really advanced Excel sheets that the banks have. So that's why they're taking all these losses. And not to mention, the dollar within the United States is completely different than the dollar outside of the United States. The dollar outside of the United States has different regulations, and they can do different things, and it's a bit more relaxed. But nobody can see into that world. Usually, like the Fed could see what's going on in America's world, right? But they can't see into this Eurodollar market. And that Eurodollar market has a Eurodollar curve that's also pointing towards severe deflation followed by inflation. So that's coming right up. That's what's being priced in. This is like the smartest, most the biggest investors. I won't say the smartest, but the biggest investors and institutional investors are saying severe deflation followed by money printing. All right. So I brought up GitHub to put it on Token Terminal. So 98 of them according to GitHub. So I looked on GitHub, found 98 contributors. So if we were to measure this on Token Terminal, I would say there's 98. But Leastwin chimed in and he said, well, that's not exactly true, because there's also XRP Labs, there's XRP Ledger Foundation, there's Richard A.H. So there's all these different projects that work off the XRP Ledger, and he's estimating over 100 or more. So if we look here, 100 or more would put you right between Filecoin and Internet Computer Protocol. So
I think he estimated 100 more. Yeah. So you'd be close to 200. Is that what he said? I think he said over 100 more.
Oops. At least 100 more. Oh, okay.
Doing so, you're looking at, what did you have it at? It's probably around the 200 range.
Yeah, so you're saying it's more than Ethereum. So if he's saying 100 more, I have 98 plus 100, 198. This is at 182. So Ethereum's at 182. That'd mean more developers on the XRP ledger. Which, by the way, that's how all Ethereum maxis try to measure Ethereum, is by the amount of fees it makes and how many developers. So if what we
Can you keep are you able to keep your, because like just like GitHub has private repos that you can't see a lot of the activity, which some of these networks definitely dealing, well, I would say most of them probably deal in some sort of private repos to some extent. Is that the same thing with developers? Or if a developer's on GitHub, you can immediately see, no matter if you can see their work or not, you can still see that they're contributing to like the XRPL? Is that how that works?
Well, they have to contribute to it. So there could be developers that have like private repositories that they're developing on, or like a forked version of the XRP ledger, and they're working on that forked version. You would never know. So some of this information's opaque and hidden from everyone. And that's same with every chain, right? So it wouldn't be just XRP uniquely, but all right. So Elizabeth Warren, Senator Warren, pretty much released this dystopian bill for crypto, where she's talking about everybody that stakes coins would need a special license. Everyone need a special license to contribute into any of these coins. So we've seen the rest of the world kind of embrace crypto, and then you come back to these people that are getting money from big banks, getting money, and they're purposely playing dumb. They're purposely putting these laws out that are oppressive, right? And what I find ironic about this is like her whole pitch is down with the big banks, and then crypto provides that, and she's the first one to say you need a license to do it. So
like, how could you even potentially enforce that? I mean, everybody would it would just be offshore. You can't, there's no way to enforce anything like this with like permissionless ledgers. Like, that's kind of the whole point. Like, how would you get somebody to comply with this?
I guess they would have to make an example. They'd have to make an example of people so everyone did it, which is frightening, right? Because like we like crypto for what it provides, and it's like there's nothing wrong with it. It takes out middlemen. That's what we want, and she's proposing that we can't do that anymore. And it's
and I mean, I think it just misses the whole purpose. Like, there's a reason for permissioned ledgers. Like, there's reasons to have permissioned ledgers. There's reasons to have permissionless ledgers. There's reasons to have probably some hybrid aspects in there. But you have to like regulate towards innovation. You can't just put everything within a permission ledger standpoint with gatekeepers and basically have Big Brother, like you said, saying down with the big banks, but recreating it through regulation within the crypto market. It doesn't make sense at all.
Well, I mean, like your point to innovation, right? So the permissionless chain allows anyone in the world to create something that takes your value and does something unique with it, right? So like you're closing off possibilities that could benefit mankind. Like you're purposely throwing a wrench in the work that actually could help humanity. And like you're the bad guy at that point, right? Like if you're purposely, trying to hurt something that's that could potentially help everyone, that's a bad person.